Welcome back to the Means Report. A reminder, by the way, if you're going to check out the Oh Baby event at Doctors Hospital, there is a lot of emphasis on toddlers as well. I know in our first segment we talked about newborn babies, but folks, if you have toddlers in your lives and you need to know how to handle them and how to be a better parent to them, then you'll want to go to the Oh Baby event next Saturday on the 28th. Right now, though, we are more than happy to welcome back to the set of the Means Report Jeff Fehrman, our in-house investment advisor with the Fehrman Group. And Jeff, you do a lot of work for a lot of people, and just like our first two guests, I know you're busy, and I'm grateful for you taking the time, especially you rescheduled this for us, and I want to tell everybody how much we appreciate that, so thank you.
You're welcome, man. Anytime.
Well, this year is already off and running. I cannot believe it seems like it was just January and we were kind of getting your beginning of the year advice.
Sure.
Now here it is, first quarter has come and gone. How are we doing economically this year? Let's take a look at that, and then let's take a look at what you expect for the rest of the year, perhaps touch on some concerns and maybe some good outcomes as we sort of set the table for the rest of 2012.
Yeah, absolutely. So far this year's been expect the unexpected. We just got past the Masters tournament. I don't know that most of us thought Bubba Watson would be the winner of the Masters tournament, which was a lot of fun, but unexpected, and that's sort of been the tale of the economy this year. We've seen the market actually have the best first quarter since 1998. So the market was up over 12% in the first quarter alone. So that was a little unexpected for most, including myself, quite frankly. So there's some good news out there, and we'll talk more about that. And then there's still some concerns out there. I think the big concerns I have, one is Europe and the mess that's still over there, and that they're struggling quite a bit. Oil prices, which have actually been a little bit better. As of today, we saw oil and gas come down a little bit this week, so that's a positive. So there's always some things looming, and a little bit slower growth still here in the U.S. is a little bit troubling as well, Brad.
What about the job market? I know that we love to touch on that because that's the thing that a lot of our viewers are concerned about. What's the current outlook as far as you can see it jobs-wise?
Yeah, jobs-wise is obviously affects all of us, whether it's us personally or friends or neighbors or whatever the case may be. And I think it's good news and bad news as well in the job market is we're at about 200,000 jobs per month, which is good news. March was about 120,000 jobs, so not quite as good in March. I think the unemployment number, we've seen that continue to come down. To me, that's a bit skewed, and the reason is we're seeing people drop out of the labor market. So if you're not looking for a job, you're no longer unemployed, you're just not looking for a job. So that skews that number, in my opinion, down a bit. A good stat I read the other day that kind of points to this is we're still 5.5 million jobs less than we were at the peak of the economy. So that's a bunch of people and a lot of jobs that just are not out there right now.
And you don't see anything major on the horizon as far as something that's just going to be this magic bullet that provides tons of jobs, or some sort of government-backed initiative perhaps? Anything coming that might give unemployed people hope?
Yeah, I don't really see the magic bullet.
Right.
I mean, I think that the magic bullet is slow and steady, and we're going to grind our way out of this thing. I just don't see the magic that happens, and I hope I'm dead wrong on that. But it's just hard to envision something completely magical that changes overnight.
What about the housing market? That is something that impacts all of us on some level. What do you see as far as housing goes right now?
Yeah, it's pretty good news from the extent that we are seeing stabilization in the housing market. Prices are stable. They're not really moving forward or increasing, but they are fairly stable. My belief is over the next few years, that's kind of what to expect as well, is price stability, but we still have about 2 million more vacant houses than we normally do. So we've got a lot of inventory that's out there. So we got a lot of supply, not a ton of demand. If you look at that, it's going to take about 3 years to burn off that extra inventory, which tells us we probably have price stability but not increases for several years to come, Brad.
And as you've talked about on this show before, if somebody is looking to sell their home right now, don't expect to make as much off it as you thought.
Yeah, don't expect to make as much, and really expect, even if you have a good profit margin in it, it's going to take longer. The sales cycle is just longer than it's been. I think it's gotten a little better in the last 6 months, but it's going to take some time, and you just got to be patient. Don't get mad at your realtor. They're not slack. It just takes a lot of time, Brent.
It does. They sit there on that market for a long time, but through no fault of anyone's. It's just the way things are right now.
Right.
What about the growth of our economy? How would you say the economy is growing so far this year? And yes, let's get back to gas prices and the kind of effect that those might have going forward.
Yeah, sure, absolutely. So the general economy hasn't been quite as exciting as the stock market. The economy in the U.S. is right on track with what I said the first round here in the new year, which was about 2% growth. We're running about 2.5% to 2% growth in the U.S., which is pretty good. Europe is stagnant to negative, depending on the country you look at. So we're kind of that slow grinding, which is why I say I don't think you're going to have the magic bullet. It's going to be slow and steady to get ahead. Oil has been a little bit of a drag so far. My belief is if we stay kind of under this $4 gas range, we're okay. If we had a big Middle East blow up and gas shot up to $5-6, it's going to have a significant impact on us. I don't think that's going to happen, but that's a weird place in the world to try to predict what's going to go on.
What about potential positives for 2012, especially when it comes to the stock market outlook? Any upsides you see in that area?
Yeah, I think a couple of upsides actually. The current trend's an upside. We've had a good trend. It's fantastic the first quarter. April's been a little choppier, but just kind of a trading around trend. Corporate earnings continue to be great. Corporate profits are good, and cash. Companies still have a ton of cash on their books that at some point is going to lead to job growth and market growth, but I still think they're waiting to see with the election cycle what happens, those different things. So there's some uncertainty that companies don't like, but there's definitely some positives in trends, earnings. Our belief in the market is that we're going to either kind of trade around where we're at, maybe a slight correction, that 3 to 5% range, but we'll be higher at year end than where we're at today.
Jeff, I want to talk to you about the political side of things very quickly. A two-part question. First of all, do you have clients who you deal with who are, as you mentioned, waiting to see what happens politically, waiting till after January to make a move?
No, that's a great question, and I think that's twofold answer is I have clients from an investment perspective that are waiting, and probably not waiting, but slightly more cautious than they might normally be. So we see that out there, and I definitely hear it every day from clients and their advisors, their accountants, those folks that say, I had lunch with a guy today, said, I got a client that needs to hire 12 people and they're not because of the uncertainty in the political environment. So I think people need to hire, which is great because it's pent up demand, but some of them are waiting till past the election cycle. And I think that's not a political statement on both sides of that equation to see what happens.
Okay, well, the second part of my question is what might happen? And again, we're not talking about who wins the presidency, but financially, economically, what might we look forward to in the first quarter and beyond of 2013? Is it all of a sudden people are going to say, okay, we've been waiting all this time now, blank is the president or blank is the president, and you're going to see some crazy shift in markets or the economy overall? What's going to happen?
Yeah, those are two great questions. I wish I had my crystal ball with me, Brad, but I think the uncertainty about that is two things. One is if the worldview is we like whoever the president is, whether it's new or current, and that adds some stability to the world, that could add to that pent-up demand playing out.
Right.
The one big wild card that is a concern economically is there a lot of tax cuts that will expire, that if that's not addressed before that point in time will take a lot of money out of circulation. So again, not political statement about what taxes should or shouldn't be, just the reality that if you pull that money that people are spending today out for taxes, that's a potential short-term issue in the first part of next year for the economy.
What should we be doing right now? What would you tell people who are watching, who are wondering how to invest their money, or if their money is already properly invested? What can you say to us as far as our current plan of action?
Yeah, I'm going to use an analogy on that one because we usually kind of end there, what we should be doing now. So this is two parts, one answer for something economic and one just a good movie suggestion. But I recently watched, strange the analogies you get, a movie called 7 Days in Utopia, which is a golf movie. And it was a great movie, by the way. But in that movie, there's lots of great life lessons, but some of the golf lessons are visualizing a shot, or having the right tools, and then thinking outside the box. I would say that lines up nicely with your financial plan of, first of all, you need to visualize and have a goal, so think about that. Next is the right tools would be the right advisor, and the advisor having the right tools to help you. And then finally, thinking outside the box, you should have an advisor that is creative and really helps you get to your goal, but there's a couple ways to usually get there, not just one.
Jeff, very quickly, we have a little bit of time left. I want to ask you something, and it's just about if you could paint a picture of a successful investor. And I want you to picture in your mind, because I hear about all sorts of people from all sorts of walks of life being successful when it comes to their finances. Whether it is the grandmother and grandfather quietly living in one part of Richmond County, or the super wealthy family living in another. Is there a profile as to what these folks do that the rest of us can perhaps follow and say, maybe I should be that way?
Yeah, that's a great question.
Is it the slow and steady thing you keep talking about?
Most successful folks that I see, it is the slow and steady. And I don't want to say slow in a boring way. It could be, the postal worker that saved and put their kids through college and had a great pension and saved money on the side. So it's not necessarily income driven, which I think is one of the focus. People say, oh, that person's rich, but some of the wealthiest people I know didn't have huge incomes during their working years. They just had low debt, they had a reasonable lifestyle, and they saved well. And that's not to say that there aren't a lot of people that are wealthy that built a great business that have huge sums of income, but even those people that had great incomes typically, they're always going to be spending significantly less than they're making and saving. Again, that's all relative, probably not the same house as the grandmother that lives in Richmond County you mentioned.
Sure.
But the profile of within your means, whatever that means is really the answer to the question. It's not a real big secret.
I'll get questions, ask Jeff the best way to do this next time he's on, or ask Jeff that, but it all goes back to how do I get to a certain level? Right. And I do believe that you do keep driving the same point home, which is live within your means and save. And
Absolutely.
Those concepts are foreign to a lot of folks, especially younger people who weren't taught that, like some of our smarter older residents.
Absolutely, absolutely.
Well, I appreciate you being on, and I do encourage people to come see you. Your doors are open to help people form a financial plan.
Absolutely. We love to educate people, want to help them personally, and it's what we take pride in, love to do each and every day.
And that's another thing I wanted to drive home before you go, is you hear the word investment advisor, financial planner. You do deal with people from all walks of life. You can come up with a plan for everyone, right?
Absolutely. Absolutely, Brad.
I do hope that you'll go see Jeff Fehrman. He can help you. He can give you a plan that's easy to follow and check in on you and have that accountability so that things work out for you financially. That's our goal. That's what we want. You can go to the Fehrman Investment Group in person. You can contact them. There's their web address, FehrmanInvestmentGroup.com. Write it down and give them a holler. You can email them now, and they'll get it Monday when they come back to work. Jeff, all the best. I'll see you next quarter.
That'd be great. Look forward to it again.
Me too. When we come back, our question of the week and how you can shape future editions of the Means Report. We'll be right back.